Welcome to the Deep Dive. Today, we're really plunging into the world of Meta Platforms, Inc. NASDAQ, Meta.
Right, a giant.
Exactly. We're going to try and unpack a pretty comprehensive analysis, looking at, everything from that huge $1.81 trillion market cap to some really ambitious bets they're making on the future.
Yeah, lots to cover.
Our mission basically is to pull out the key insights from their financials, their strategic moves, and of course the regulatory stuff that always seems to follow them. Give you a shortcut to getting up to speed on this tech titan.
Makes sense. Where do we start?
Well, to get Meta now, we should probably look back a bit. It wasn't always Meta, right? It started as the Facebook way back in 2004.
I feel like a lifetime ago.
Doesn't it? But the big shift, the really symbolic one, was October 2021, rebranding to Meta Platforms, Inc.
Yeah, that was a statement. More than just a name change.
For sure. It signaled that big push towards the metaverse, but also, maybe an attempt to step away from some of the controversies tied to the Facebook brand.
Definitely. And structure-wise, it's interesting how they're set up now. Two main parts, really.
Right. The family of apps.
Exactly, FOA. That's your Facebook, Instagram, WhatsApp, Messenger, and now Threads. And this part, it's the engine, pulls in something like 98, 99% of the revenue, mostly ads.
Almost all ads.
Pretty much. Then you've got the other side, Reality Labs, or RL. That's the metaverse play, the Quest headsets, AR/VR research.
The future, supposedly.
You'll bet on the future, yeah. But it's losing a lot of money, like a record $17.7 billion operating loss in 2024 alone.
Wow.
And that's on top of previous losses. We're talking nearly $70 billion gone into RL over 6 years. Cumulative.
70 billion. Okay, so with those kinds of losses piling up in Reality Labs, how sustainable is that? I mean, are they really going to stick with it? Or could that force a change?
That's the multi-billion-dollar question, isn't it? But interestingly, alongside the RL spending, they're making another massive bet. They're going hard on an AI-first strategy.
AI everywhere now.
Exactly. And Meta's no exception. Huge investments. They're talking $60 to $72 billion in capital spending for 2025. A lot of that is earmarked for AI infrastructure.
60 to 72 billion.
Yeah. Plus, $14.3 billion into scale AI. So the idea with AI seems to be twofold. One, make the current ad business even better, more efficient.
Like the cash cow.
Right. And two, create totally new ways to make money. Things like maybe paid access to their Llama AI model. That's their big AI software, or, AI smart glasses down the line.
Okay, so huge spending on RL, huge spending on AI. How does this actually stack up in the bottom line? What do the financials look like?
Well, connecting it all, revenue growth has actually been pretty robust overall. If you look back over the decade, they hit $164.5 billion in revenue in 2024. That's up nearly 22%.
Impressive jump.
It is. Now, there was that dip in 2022, remember? More competition, Apple's privacy changes really hit them.
Right, that hurt.
But they bounced back strongly, and a lot of that rebound people think is down to those AI tools making their ads work better.
Okay, strong rebound then. Looking at these numbers, it really does seem like the core apps, FOA, are basically bankrolling these huge Reality Labs bets.
That's exactly it.
How does that affect their stability, though? Or even just their strategy long term?
Well, it shows up in profitability, too. Net income in 2024 jumped way up to $62.36 billion. Diluted EPS, earnings per share, hit $23.86. That's like a 60% increase from 2023.
Huge recovery.
Yeah, a significant recovery. But like you said, it really highlights this cross-subsidization, profitable apps funding the RL losses. And this ties into something else interesting, how they make money globally, specifically ARPU, average revenue per user.
Oh, okay. Where does the money actually come from?
Right. Get this. The U.S. and Canada generated over $63 billion in 2024. Asia Pacific, only $45 billion.
Even though Asia Pacific has way more users, right?
Way more users. So it shows how much more valuable monetarily users in developed markets are to Meta right now.
So the takeaway isn't just rich countries pay more. It's that their future user growth might be concentrated in regions where they make less money per user. What's that mean for their strategy?
Well, it's a real challenge, isn't it? User numbers might grow fastest in places like Asia or the rest of world category, but the profit engine is still heavily dependent on North America and Europe. They've got to figure out how to either boost monetization elsewhere or rely even more heavily on those core markets. It's a tricky balance.
Definitely.
Now, tying this all together, how do you value a company like this?
Yeah, this is where it gets really interesting for anyone watching the stock. If you use a traditional method like Benjamin Graham's Graham number, classic value investing stuff.
Old school approach.
Right. Based on that, Meta looks way overvalued.
Yeah.
Current price around $770, but the gram number calculation comes out somewhere near, what, $196?
Big gap.
Huge cap. But then you look at the revised Benjamin Graham formula. This one tries to factor in growth expectations.
Okay, how does that change things? Well, if you plug in a reasonable long-term earnings growth rate, let's say 15% a year, the calculation spits out an intrinsic value closer to $824.78.
Whoa, so under the revised formula, it might actually be undervalued.
Potentially, yeah. And that's the fascinating split, isn't it? It shows the limits of traditional valuation for these high-growth tech companies pouring money into future bets. Are you valuing the company based on its past earnings or its potential future from AI and the metaverse? Investors kind of have to pick a lane.
Fascinating dichotomy. But it's not all about growth and potential, is it? There are some serious headwinds.
Oh, absolutely. The regulatory scrutiny is immense and ongoing. You've got that massive $5 billion FTC fine over the Cambridge Analytica scandal. Remember that? User data misuse.
Hard to forget.
Then there's an $8 billion shareholder lawsuit still going on. And in Europe, a $1.2 billion fine under GDPR. That's the big EU privacy law for data transfers. These are not small numbers.
5 billion, 8 billion, 1.2 billion euros. Those are staggering fines. Do these kinds of regulatory hits and lawsuits genuinely threaten Meta's whole model? Or is it just, the cost of operating at that massive scale?
It's definitely a significant cost, and it feels like a constant battle for them. And it doesn't stop there. The antitrust pressure is relentless, too.
Right, the competition angle.
Yeah, the FTC sued them back in December 2020, trying to force them to sell off Instagram and WhatsApp. That actually went to trial in April 2025. The outcome is still uncertain, but it's a fundamental challenge to their structure.
Divesting Instagram and WhatsApp would be monumental.
Absolutely. And then on top of all that, you still got the never-ending controversies around content moderation, balancing free speech, platform safety, harmful content.
Yeah.
It's a minefield they're always navigating, often with heavy criticism.
So putting this all together, what does it mean for you listening in? Meta Platform is clearly this powerhouse, constantly evolving, using its incredibly profitable ad business to fund these huge, expensive bets on what's next.
Yeah, this deep dive really shows that delicate balance, I think. You've got the undeniable profits coming in now from the apps, funding these really high stakes, high cost visions for the future with Reality Labs and AI.
Right. So here's maybe the really interesting question to leave you with. Thinking about Meta's long-term success. Is it more about actually making money from the metaverse and AI eventually? Or is it more about just successfully defending that core advertising fortress from all the regulatory heat and the competition? What really stands out to you about where that balance lies?